jump up in the stock price as well. But we do have the management of Inox India who's joining in with us to talk to us about their numbers. They've seen good numbers coming in from the company. Highest ever revenue, EBITDA, order inflow and LNG order inflow as well. Revenue surged around 33.6%, while EBITDA also is seeing a rise coming in. We have Siddharth Jain, the promoter and a non-executive director at Inox India, joining in with us to discuss about the numbers, what is the outlook of the company going forward as well. Siddharth, good morning. Thank you so much for joining in with us on the show. Strong quarter. There's nothing to complain in terms of Q4. What are we watching out for in terms of FY26 guidance for the year, the full year of FY25? Seems like a bit of a moderation and the growth was at 15%. What are we watching out for in FY26? What is going to be aiding your growth and driving your growth?
Oh, thank you for having me on my show, first of all. It's nice to be here once a quarter and update you on what's going on. We basically had a great last year, of course, as you mentioned in the numbers, we had over a 30% growth in Q4. Our EBITDA grew by 50%. And even although in the last quarter, although for the full year, we had moderate growth between 15 to 20% across our top line EBITDA and PAT. Going forward, we clearly see our three verticals all increasing at a rapid pace, whether it's our industrial gas, LNG, our cryoscientific, as well as our new beverage containers division. We've seen some great tailwinds from the energy sector globally. Our strategy that we had laid out over 2 years ago during the IPO time of focusing more on export jobs has also played out, as you can see from our backlog numbers as well as our revenue growth numbers. Going forward, I certainly see this year as a big year for LNG. We are seeing, a greater adoption of that fuel, not only in India, but across the world, across, different segments. So we're very excited about the next couple of years in this vertical.
Right, you're excited about the growth, but does that mean we'll see that 20% growth coming back, which we saw before in FY23 and FY22? Is that something we're watching out for in FY26 again?
I certainly hope so, but we don't look at it on a year-on-year basis. We look at it on a blocks of 5-year basis. A lot of our jobs are non-standard jobs, EPC-driven jobs, which extend beyond a year. We also have variability in orders, dispatches on a quarter-on-quarter basis. We're here for the long run. We certainly feel over the next 5-year block, we should be able to definitely match the growth of the past 5 years, if not beat it.
Siddharth, good morning. Thank you for joining in. The number of tailwinds that you highlighted in your first answer, does that or do all of those tailwinds translate into further margin upside for you in FY26? Do you remain in that 21 to 23% range, or do you see it going higher considering all of these tailwinds? What's your medium-term outlook on the margins? And if you could also tell us the margin differential between the end-user applications as well, Siddharth.
Sure. So, I feel, as you rightly mentioned, our margins being in the early 20s, I think are very healthy margins. The strategy and the focus of our company is to grow our top line while maintaining our margins. That's something that we mentioned during our IPO as well, that the aim is not to expand our margins, especially in our sector, which is the capital goods sector. It's not normal to see now margins of this sort. The reason we're able to achieve it is because of the superior technology that we have, and we're able to command a premium in the international markets and domestic markets for our product because they perform a lot better than everybody else's product. So going forward, we would like to focus on capturing larger market share, doing more first of its kind products, being a leader in the cryogenics industry globally, rather than see margins expand too much. Coming to your question on the three verticals and the difference in margins, clearly we have industrial gas, which is our legacy, LNG, which is, has been going for the past 10 years. And then we have cryoscientific. The highest margins always come from the cryoscientific division, followed by LNG and then industrial gases division. So this is to do with the complexity of the, of the projects that we do, the equipment that we make. It's obviously the most complex for the cryoscientific division, which focuses not only, on space, nuclear fusion, and many other verticals as well. So, yeah, I'm happy to inform you that the reputation that Inox India has built in the global market, especially in the CST division, which is the toughest to break through, and there are hardly any competitors in the world. I'm really happy to inform you that we have a formidable position there.
Right.
It continues to grow great.
Siddharth, paucity of time, so I'm just clubbing two questions into one. You ended FY25 with an order inflow of 1,500 crores. What are you expecting this year? And part two is your orders in your backlog as well in LNG has been very strong, but that has not translated into execution. Why is that so, and when does that pick up? Very quickly, if you could tell us both of them.
Yes, absolutely. We certainly, I can't give you exact numbers on what we're going to expect the year at, but we hope to certainly, continue our growth pace and order inflow as well. And in terms of LNG, most of the LNG jobs are non-standard jobs which take a longer time to execute. So you're not going to see that entire backlog flow into order inflows immediately. An example is in Bahamas, we got this huge order of a mini LNG terminal. This takes anywhere from 12 to 18 months to execute in a phase-wise manner. So while it shows up in the order backlog, you're not going to see that convert to revenue immediately.
Okay, Siddharth, thank you so much for joining in with us this morning, giving us a quick take in what we could be expecting from the company, and hope to see you more often on the channel, not just a quarterly basis. But Inox Wind, as of now, managing to hold on to gains of almost 1.5% in Inox India, I beg your pardon, managing to hold on to gains of 1.4% and 5% in today's trading session. But let's move on.